Over the last decade, investing in the S&P 500 has been as close to effortless wealth building as it gets. With a steady 13% annual return made, it seems like all you have to do was invest and watch your portfolio grow to the moon. But according to Goldman Sachs, the golden age of stock market returns might be over. Goldman Sachs isn't just throwing out predictions, they're warning of 3% annualized returns for the S&P 500 over the next decade. It's grounded in key structural changes happening in our market currently, as well as historical precedent. Let me give you 3 examples, because the future often mirrors the past, and here's what we can learn. Japan has already experienced a lost decade plus. After their bubble burst back in the 1990s, their market exchange stagnated for years. Investors who relied solely on the Japanese market saw their portfolios suffer, while those who diversified globally found much better opportunities to navigate a lost decade of Japan market stagnation. In Weimar Germany back in the 1920s during hyperinflation, tangible assets like real estate and commodities preserved wealth while cash and bonds plummeted in value for over a decade. And my friends, it's happening right now in other parts of the country. Argentina is currently on the rebound, but Argentina has been on the verge of a lost decade plus for the last 15 years. It's common knowledge in Argentina that the paper dollars are worth nothing, and people who live in Argentina are constantly flocking to trade their pesos, which are worth nothing, for anything, even if it's just a piece of furniture, because tangible assets safeguard their wealth. My friends, it's happening right now, and Goldman Sachs is using historical precedent as well as their market reputation. I want you to consider this. Goldman Sachs isn't just some pundit on the streets. Goldman Sachs has been in the investment game for well over 100 years. They manage billions of dollars in other people's money, and their viewpoint on the economy is going to have real impacts on their investors who are paying them to get much better than 3% results. So here's the truth. Wealth isn't lost in recessions, it's transferred. Those who simply try to white knuckle their way through market turmoil risk being on the losing side of that transfer. If there really are going to be more recessions over the next decade, and as Goldman Sachs is predicting there's going to be 4, this creates tremendous opportunities for those who are willing to adapt. This is going to leave others left to bear the brunt of the downturns. Remember, the white knucklers, but for you on this channel, you're here to raise your financial intelligence, to see the silver lining, to see the opportunities, because my friends, opportunities always exist. So let's look at some of the solutions that could be on the horizon for you. Okay, the first key is acknowledging reality for what it is. I believe that the era of easy stock market returns, it's going to be fading, but that doesn't mean your financial goals are out of your reach. Adapting your strategy now can position you for success over the next decade. So let's explore how. Number 1, consider diversifying beyond the S&P 500. Relying solely on the US market, especially the tech-heavy S&P 500, is no longer enough. Look beyond Wall Street. Now, if you still want to have your money in the markets, look at international markets. There are emerging markets, not just US markets, that are adding more value and are poised for more growth over the next decade. Now, you could look in real estate, private equity, and other alternative investments as well. But diversification isn't just about managing risk, it's about unlocking brand new opportunities for growth where others aren't looking. Opportunity number 2 is to diversify your wealth into cash flowing assets. Now let's pause here and address the elephant in the room. You're on a channel called Wealth Outside of Wall Street, and for good reason. Listen, the past decade has been incredible for those who invested in the market. I'm not going to argue that. But what happens when the tide turns? And this is where me and the Wealth Outside of Wall Street channel really help people. We help people build a financial strategy that we call the passive income machine. This is a strategy that combines overfunded cash value life insurance with cash flowing real estate, uniquely combining these 2 asset classes together to protect your money from all forms of market loss and to invest in real tangible assets. Think about what's going on in Argentina. They're trading their pesos for real assets. With overfunded whole life insurance and real estate together, you get the best of both worlds. You eliminate taxes, you eliminate market volatility, you get the ability to use leverage, and then you acquire real in-demand cash flowing assets. So let me break this down for you. The first asset class is what we call the vault. This is an overfunded cash value life insurance policy. This locks in your gains, it benefits from today's higher interest rates, and it offers both a fixed tax-free return as well as upside dividends based on higher interest rates. This is your financial foundation. It secures your capital that you put into it. It gives you a guaranteed return, and the biggest advantage of it is it opens up a unique private line of credit. Every dollar that you have inside of one of these policies gives you the ability to access life insurance company money as a form of leverage, as a form of line of credit to go out and accomplish your short-term goals. Now, what this does for you is it allows your money inside of your vault to continue to compound and grow tax-free while still using the value of your dollar today way to accomplish other goals. So what is that other goal? Well, it's investing in cash flowing real estate. So here's how it works. What we do is we take a 20% loan from the insurance company and we use that as a down payment to buy a very specific type of real estate. Now, I'm not going to get into too much detail on the real estate side of things right now, but we're looking for the right property, the right location, and the right property manager. We want to make this passive. Now, once we've found those three things together in a single asset, we put a 20% down payment to acquire that asset. That 20% comes from our vault. Then we take bank money to acquire the other 80%. Now, this single advantage inside of the passive income machine is not available in the market. You, my friends, have the ability to unlock leverage, which means every dollar that you put into the passive income machine can now turn into 6 using bank leverage and vault leverage simultaneously. This accelerates your progress and your goals towards achieving financial freedom. And over the next decade, what if you could take some of your gains that you've locked in the market and solidify them in the vault and then leverage the vault to build up real assets that rise with inflation rather than assets that are going to get eroded or destroyed by inflation.
Did you see what I did?
You so totally rock, Squirt!
Now, this isn't about abandoning the market entirely. It's about repositioning your money to thrive in the coming economic environment. And here's recommendation number 3, my friends. Stay flexible. Flexibility is key in uncertain times. Consider bonds. I mean, right now, higher bond yields are making fixed income investments more attractive, providing stability alongside your growth-focused assets. Consider maintaining more liquidity. Liquidity ensures that you're ready to seize opportunities during market downturns. Whether it's buying undervalued real estate, acquiring a business, or investing in other high-income potential areas, be liquid so you can see and seize the opportunities that are inevitably going to arise during the next decade. Now listen, Goldman Sachs' prediction, it may seem bleak, but it's also a wake-up call. The next decade is going to favor the informed, the proactive, and the adaptable. This is your chance to build a portfolio that thrives in all market conditions, to focus on cash flow and undervalued opportunities, and to take control over your financial future and rise above the crowd. If you're ready to break free from the herd and create a strategy that works for you, hit that subscribe button and join the community. Remember, the best way to predict the future is to prepare for it. So my friends, let's get started today.